You won't believe that Tesla stock is in a strong bullish trend, currently up 2.82% in the pre-market session of today, the 14th of May 2025. It has broken through the resistance at its from its price channel or its market grid, as the case may be. Price channel here on Think and Swim, market grid on Trading View. It has broken through the resistance at around 3.21 and printed in an intraday high of 345.88 as of yesterday, the 13th. So we have been able to prod Claude to give us some insight, some market commentary. So it's saying here, technical structure suggests Tesla is forming what it calls a bull trap configuration, a pattern that frequently precedes significant downside moves. And then here are some of the probability assessments. You see that resistance 321.38 I was talking about. So it has already done that. The probability of it testing that resistance has been, it was 75%. That has been met now. It's broken through that. Let's see. Um, Creating a brief sort of optimism before rejecting and falling towards downside target of 2225.80 over the next 2 to 3 weeks. However, the algos here are not suggest nothing of that nature. So it's good. It's good we have a divergence. I mean, a diverging set of views from the machines. The machines we have here on TradingView is saying no. We have high highs. High highs. We have 396.07 coming up by the 16th of June. Nothing, no drop below its 10 period moving average. It's good we have these, divergent views. And in 15% probability that it breaks through all resistance levels and continues towards 345. Done that, with which the prevailing, if you like, prevailing regime now, driven by positive sentiment around China component shipping and potential semi slash cybercar production acceleration. And then 10% probability it experiences immediate rejection and moves directly to test support at 3.08.67 before making its directional decision. Okay. Why this matters? Bear in mind, this is the opinion of Claude. Okay, the fundamental catalyst resumed China US component shipping creates a perfect setup for a retail bull trap. While this news appears positive on the surface, the market has likely already priced in this development, evidenced by the divergence between its ppm3, which measures this ppm3 measures the angle of attack of its 40-day moving average. Okay, so that the divergence between the positive value of its angle of attack and the positive first derivative and the negative second derivative, and then the bearish 21 period forecast of 273.58. Is it really a forecast? It's just where it's that 21 period moving average is currently at the moment. So, and then the 200 angle of attack of its uh, price pressure momentum 200, just beginning to just slightly, just modestly yes, the stock I told you is in a bullish trend. Yeah, is in a strong bullish trend. Yeah, so that the angle of attack of this trend is in trend mode. It's just modestly trend in trend mode. Okay, so smart money understands that despite the temporary tariff suspension, significant risks remain. The 90-day suspension is merely temporary. Production timelines for Cybercab and Semi remain uncertain. Tesla faces increasing competition in all markets. Okay, action plans for investors. Given the technical setup and fundamental backdrop, investors should consider the following strategy. Short-term traders prepare for heightened volatility. Consider taking profits if Tesla reach extends beyond 3 to 1.38. I think that makes sense. If you have a look here, it's trading right outside of its price channel. Naturally, it will begin. It may want to come back into this price channel and contract somewhat before extending. So I agree with that. It's something, but it's up to you to decide. If you want, you can remain strongly hell bent that it's going to continue to print higher prices as the algos here on TradingView is indicating. Okay, swing traders, watch for rejection signals at resistance levels and consider short positions with stops above 3 to 8.09. Long-term investors consider partial position reduction on strength with plans to reaccumulate near the primary downside target of 225.80. Option strategies, directionally agnostic strategies like straddles or strangles may capitalize on the expected volatility regardless of direction. Um, okay, remember, risk management remains paramount. Tesla's technical structure suggests we are approaching a critical inflection point that could determine the directional bias for weeks to come. Final thoughts: the temporary resolution of the US China trade tensions has created a short window of opportunity for Tesla to advance its manufacturing plans. However, the technical structure suggests that smart money is preparing for a potential reversal. The next 7 to 10 trading sessions will be critical in determining whether the bulls or bears ultimately prevail in this high stakes battle for Tesla's price direction. So as I was pointing out earlier on, we have this is what we have. We have extrapolation to the upside. Higher prices are projected. Let me see what I can get projections. Okay, we don't have any upper projections on this 1 day chart. We have downward projections. Everything is a downward projection here. 183.12, 199.4 to 225.80. Okay, let's have a look at the 4 hour chart and see what we have. On the 4 hour chart, let's see what we have. Let's see. On the 4 hour chart, very short term chart, and obviously it gives you a slightly granular picture of what's going on in the daily chart. Here we have extrapolation to the upside as well. Higher prices are projected up till Friday the 23rd of May. We have up to 349 or thereabout. So those sort of prices have already printed. So in terms of projections, no upper projection. 309 0.82 is a downward projection we have. We can sometimes we can have a look at shorter duration charts. They might give us projections that you won't find on maybe on the daily chart. Here on the 2 hour chart, a retracement is what is extrapolated. Upper projection, we have downward projection here to 84.79. Let's have a look at the 1 hour chart. The 1 hour chart, let's see what we have. No upper, let's see if we have upper projections. We have some upper projections: 366.44, 386.48, 398.87. You see what I mean? Okay, let's have a look at the 45 minutes and see if there's projections here. Yeah, higher prices is what is extrapolated. No upper projections. Okay, let's have a look at the 15 minute. Okay, some upper projections: 352.57, 360.5, 365.41. Yeah, we can even come all the way down to the 5 minute chart and see. Not that this will really be of any use, but we're just going to read out, no upper projections here on the 5 minutes. So just see what you make of these two opinions we're giving you. The Claude is cautiously optimistic, saying that you shouldn't be there now if you're ready. If you already have a position, and not exactly the best time to buy, but also uh, presenting directionally agnostic strategies like straddles or strangles, that one can use to capitalize on the expected volatility regardless of direction. And then we have the algos here on TradingView. especially in the trading on the daily chart, suggesting that high highs is high prices is what we should expect. So see what you make of all of these, and thank you very much for watching this video.